Does life insurance still pay if you're put to death? You might be surprised that life insurance policies, unlike most medical insurance policies that won't cover costs associated with self-inflicted harm, issue a benefit to beneficiaries even when the insured has taken her own life. Whether the policy owner committed suicide or had a physician-assisted death wouldn't affect the policy's payout, provided the policy was in place for at least 2 years. The first 2 years of coverage are known as a contestability, or exclusionary, period. If you die within that time period, the life insurance company will investigate your death to make sure you hadn't committed fraud by providing inaccurate or incomplete information, and your insurance application, like hiding a terminal diagnosis, severe depression, smoking, etc. Note that not all companies nor policies are exactly alike, so you should read through your policy carefully and ask your life insurance professional for clarity on anything within it that you don't understand. The reason assisted suicide is not considered an issue for life insurance is a relatively simple one. Physicians are only allowed, by law, to help someone end their life if that person is already suffering from a terminal condition. In effect, the person is going to pass away regardless of whether they commit suicide, but allowing them to take this option takes a great deal of strain off the patient and their family, and gives them the dignity of choosing to die rather than live out their remaining days in pain, dependent on machines, or otherwise wasting away. That depends on the terms of the contract. For example, where I am, if a person commits an offense, and in the commission of the offense, is convicted and sentenced to death, the policy often does not pay out. The insured is deemed party to his own demise. However, if in the course of travel, in a covered region, said person runs afoul of the legal system that is not viewed as robust, and in the course of a conviction, flawed or otherwise, is put to death, the policy pays out. An exemption arises if travel is to a region where a travel advisory is in effect, such as a conflict, and the life insured, without reason of work or otherwise, willfully and negligently travels to said place, and in the course of it, loses his life, the policy does not pay out. For example, our policies explicitly do not cover North Korea and Somalia. Yes, life insurance policies will pay a benefit to your beneficiaries if you are put to death. Life insurance policies do not contain exclusions for death by electric chair, lethal injection, or any other means carried out by capital punishment. Nor do life insurance policies contain provisions that prevent benefits payable following death caused by criminal activity. Benefits are paid regardless of the cause of death outside the typical 2-year suicide clause and incontestability period. As long as the policy was applied for truthfully without fraudulent intent, there are any number of scenarios where a death benefit could be paid as a result of capital punishment. Of course, that is not to suggest that a death row inmate would have success finding a life insurance company willing to issue a new policy. This was a really interesting question and one which I actually enjoyed reading up on. It appears that old policies used to exclude death by suicide and even death resulting from the commission of a felony death penalty. However, insurance companies wanted to start saving face and stop looking like they're trying to weasel people out of money which they deserve. So they instituted a rather standard 2-year exclusion period. If you die within 2 years of purchasing your policy via suicide, you will not be able to claim the money of the policy. However, if you did it 2 years after the policy was purchased, then you're most likely safe. It works the same way with the death resulting from the commission of a felony. Theoretically, since this has never happened, you would be able to claim your insurance policy after you get put down. Interesting, if the policyholder committed suicide before the 2-year suicide clause ended, the beneficiary would not receive payment, she would only receive the premiums paid without interest. Likewise, if the person made a material misrepresentation during the same time period, only the premiums would be returned. That is because the decedent is now considered to have entered into an invalid contract with the carrier. If by put to death, you mean a homicide, yes, it would be paid out, unless the beneficiary was also the perpetrator. This is because the law precludes a murderer from profiting from his/her crime. In that case, payment most likely would go to the secondary beneficiary, if selected, or possibly even escheat to the local government authority.